The gray area is the area of overnight, and the white area is the trading during the trading session. And here you could see Monday and Tuesday, not a lot going on here. Fed Bullard comes out and lifts the market. You can see right in here as he says no need to raise interest rates, and that, of course, the markets like, because they like to see all this money getting printed. Then came Apple jumping 3 points on Tuesday. It moved up to a record 161.83, but then saw Thursday almost a collapse where it was down over 5 points. And the financials popped on what looked like higher rates until late in the day when POTUS came out and threatened North Korea with fire and fury over the North Korea's nuke advancement, and word that they have a small one that can fit on the nose of a missile, and that got everybody upset. The market started to sell off, as you could see right in here. Markets weaker overnight on Wednesday, and then Apple goes positive again and lifts the market. You could see that in here. It was kind of a zigzag day as the market closed up on its highs, and the shorts were writing me and saying, holy cow, can't they ever go down? Gold and the bonds jumped, however, as a flight to safety really started to tell us that there was some issue going on. And then here, world markets started to decline overnight on Thursday as really North Korea threatening Guam again, talking about their plan to shoot 4 missiles at it, got the markets falling. It collapsed in here as we saw huge declines, the biggest decline we've seen in quite a long period of time, some months. And Dillard's came out with a loss. Macy's warned, and that really brought a collapse in the retail stocks, which were already collapsing anyway. And then on Friday, you could see we get a modest bounce as Apple again is leading on the upside. CPI weaker, and year over year is only up 1.7%. Who cares? So what? I mean, all this focus by the Federal Reserve, if you ask me, is a little bit ridiculous. So who is Slim? I'm going to give you a little bio right now, and also an introduction to what I think is an amazing service for traders at all levels, traders of all styles. Well, I've been a trader for 43 years. I started trading at the CBOE in 1974. That was even before there were any put options. We only traded calls. Also was a member of Chicago Board of Trade, where I traded in the bond pit, bond option pit, corn, soybeans, and Chicago Mercantile Exchange, and of course in the S&P pit when the big contract was traded. So I've been in the markets for a long period of time. In fact, 1984 is when I moved up to an office and became one of the first screen traders. So I had a lot of experience on the floor and off the floor. 1996 was a time when I really started to work on me, and I became a personal growth facilitator and have worked with just countless people and coached countless people in the markets. What I do is bring to you all of my experience, all of the work that I've done in the markets and learning analysis and in the personal area, and combine all of that experience in the 9 video categories that I bring to my members every single week. There's amazing depth in there, great learning for people of all levels, all the way from the technical side to the personal side, all about styles and strategies and plans and strategic approaches, and there's just so much there for you to see. And especially as I go through teaching analysis the whole time, I illustrate my cycle analysis, and with tons of people that are members that are learning that also. So what I want to show you is our level 3 rankings and trade setups and option bias table, which includes all of our videos if you become a level 3 member. I'm going to quickly take you through this table so you can get an idea of what we're doing. So everybody receives this table updated every single day with a recap in the mornings of any changes that we made. So quickly want to show you what goes on in here. We have a proprietary studies, combinations of redundant studies that give us a sense for momentum and cycle rhythms. Our long term, that's LT, is a few proprietary indicators that look at monthly charts. So we want to find the primary monthly trend. And we show that as green, yellow, or red. You can see that right in here, as actually these top few are all in a long-term positive momentum. Now, the intermediate term is made up of momentum studies and our cycle analysis. So if you happen to be an investor type or, longer holder, you're going to look at both of those. I mean, when you have a situation where, like in Caterpillar, where you have long-term positive and you're in P3, which is the highest rating for the cycles, well, the probabilities are very strong that it's going to be moving to the upside. And even if there were minor corrections, it probably then would only be minor and moving to the upside again. Now you have situations like Disney, DIS, where right here it's showing you, well, there's a long-term uptrend, but the intermediate term has turned down, so there's some worry in there about the condition of it for longer-term traders. So you can see how that works, and we actually have this in there for 56 of the best traded high caps, and also the indexes. As I come down here, you could see SPX and NDX and all of the futures that we look at. So we do this for 80 symbols. These are the best traded symbols. You don't really need anything else at all. So you could see this was updated on 8/11 for actually this morning when this is recorded. So for the swing trader types, that would be looking at the intermediate term, which is our cycle analysis, and the short term, which is also a combination of proprietary short-term indicators. So when you have a condition like in Amgen, where it was -1 on the cycle intermediate and negative right over there, you have that condition that is looking like, well, it was going to decline, and it's set up, and we actually put in a short-term setup right in here, and when it's grayed out like that, we actually removed it because it worked so well so quickly in actually 8 days. That was dated on 8/3. You can see here on Intel right over here that this one is at P1 in green. It actually had given us a very overbought condition that reversed to positive. I'll tell you about that in a second. So we had a position on, and there was no pullback, so we removed it. It wasn't any kind of a loss in there. It just simply didn't work, and the time passed by, so we essentially removed it. So that's what we do. Now, the last one in here is just an incredible one called our option bias ranking. And what this is made up, again, is proprietary indicators that give us a sense of a combination of the short term all the way through intraday readings that tell us the likelihood of an advancing period, a neutral period, or a positive period. And when it gets to P1 orange or N1 orange, those are very likely reversals. As a matter of fact, you can see here that Starbucks right over here is an N1 orange, which means it's at an extreme oversold condition and a reversal's pending. Now, we're running about 68% excellent trades to put on during those or excellent entries during the N1 and P1 period. So if you were an option trader, your option bias would be contrarian, and that's one of the few contrarian things that we look at in there. If you were, in the case of, let's say, American Airlines, let's look at that, you can see in here that, well, we had a slightly negative intermediate term, we had a kind of a neutral short term, but the option bias indicator all put together was severe to the downside. And you've probably seen that for the last weeks, American Airlines has been quite weak. Amazon turning quite weak. It's actually turned negative on the intermediate, and that has been moving down pretty significantly. These are great directional indicators. Bristol-Myers has been super strong, and that one you can see is at P2. So these are just fantastic. Take a look at Disney. Even though it's positive on the long term, everything about this has been negative on the intermediate and short term, and you've seen the stock absolutely fall apart. So this is just an example of how all of that works. It's just a huge amount of information on one page for everybody. Our long-term rankings, our intermediate-term rankings, and our short-term rankings, and our option bias rankings. Put that all together and you just have an amazingly huge amount of information all on one page on the 80 best traded symbols. And you can have that every day from us by becoming a level 3 member. And you will also get all 9 categories of our videos, of which there are 4 days of new videos every single week. So this is just, I think, important for you to subscribe, and it supports us and allows us to keep bringing all of this great information. So if you want to get a look at this and try it, well, you can have our 1-month trial, which is only $43. It's half price. You can look at all the videos for a month, get all of this information in the table for a month, and I think that you'll find it just fantastic information. $43 to try it out. How can you not? And it really supports us. So send me an email, slim@askSlim.com. Ask me for the level 3 trial link, and I will send that to you. Take a look here as we look at the S&P 500 SPX. Now, this is a slight adjustment for my chart subscribers. We're going to send out the new futures charts this weekend with some updates on them. So we have been looking for this decline. We've been talking about periods of extreme risk to the downside, and especially being in August into September, and you could see how we have this projected. Now, this is slightly different than we've have had it. We thought that it would go fall until about Thursday of this week. We did that, but it actually projects out to potentially into Monday. So you might get another pullback Monday or into Tuesday and then get a bounce. So this is that bond market decline we're looking for, or gold market decline, is this period of bounce in here. But this, again, is a period of extreme risk out over here. And late August is what we've been talking about. You can see that bottom that it's pointing to over there, and we think that could easily be the 5% correction that everybody says can't happen. So you can see that in there. NDX, we'll look at that one right in here, and you can see it hits our number right here. We actually said this week that our target on the downside was 57.87. It got down over here to 57.82 approximately, and then got the bounce. You can see we're projecting it out into the end of August or beginning of September to continue on the downside. So if we look at the Russell RUT, this is important. In that we got extreme oversold right over here. So the probability is pretty good that this is going to overperform, even though we think markets are going to fall. So that's why we say that, maybe it's time to be long Russell and short the other indexes. Have a sense that that might work. Look at here now. Look at how the Russell turned into negative momentum over here on 8.3. You can see that right over there. As it lost its positive momentum over here on 8/1, August 1. So if you look at the S&P 500, you could see it just is going to neutral over here. So the Russell absolutely led on the downside, and the NASDAQ and the X, you could see that's just losing it. So you better believe this is going to go to negative momentum, and that's why we think also that there is more downside in there. But you could see the weakness in this Russell, and when you look over here, you could see that that Russell projection is also out towards the end of the month, but we just don't think it's going to be as bad. That's all. We think that the greater percentage is that it had given up a lot already, and that it will overperform. Take a look at the Dow Jones Transportations. You could see that in here, as it's moved down from 97.63 all the way down to 92.23, that is a more than 5% decline in there. So you could see that it's been very weak, and you could see in here that was our projection on that megaphone top, and it has continued to move to the downside. So all of these projections really good, and the stock market did a lot of what we said it was going to do this week. Take a look at now one more thing at the VIX. and we're going to switch over to the daily chart on the VIX. You can see the VIX, we talked about it exploding over 15. It actually got up to 1723. Remember that we're looking for the stock market to have a bounce in coming days right in here, and that would then get you a little more pullback in here, but then we think it's going to explode again. I wouldn't be surprised to see plus 20 or even 30 in the VIX before this corrective period is over with. So we think any pullback here in implied volatility is only going to be a temporary thing. I hope you enjoyed that video. Be sure to subscribe to our YouTube channel and also go to askSlim.com and become a level 1 member. No cost to you, and we have some special videos for you to see. I know you'll enjoy them.